Record. Welcome to the Sunday call. What I'm going to do today, oh shoot, hold on, my charger. What I'm going to do today is, um, and what I will probably start doing from here on out. So I do the weekly analysis on Saturdays. So I'm going to go through some of the pairs, not all of them. Um, and just because I think we have touched on pretty much especially how I trade, um, or the tools that I use and how I identify market structure, and price action. Price action I can probably get into a little more. But what I'm gonna do from here on out is probably just gonna be on repeat. Wash, rinse, and repeat. So and I can't remember which. I- I'll update it. I'll update it and post it in the group. But just my step by step on how I approach the market every week. So with that being said, I'm going to start off with some currency pair, and that's all I'll do is currency pairs. I won't do indices or any stocks or anything like that. But
What you thinking about futures? How you like the change or the new system? Well, I don't know if it's different, but what do you think about
so
futures?
so it's really no different. Like for me, it's no different.
Okay.
It's just the only difference for me is like I can't take $100 and run it up to $1,000 in 2 weeks. You know what I'm saying? Um,
Right.
um, and that's really the only difference is
The
the the
leverage.
fund. Yeah,
Okay.
yeah, that's it. But whenever I see something on, because I have and you can see on here, I have the Trade Station that I can connect. You see the two favorites, and then I connect
Mhm.
my Oanda. So what I put on one, and then the other difference is I can only trade so much, or what I would want to trade on futures. Like I trade GJ all day.
Mhm. Oh, and they have times like it'll cut off at a certain time, doesn't it?
Well, no, I just can't
Oh,
trade.
okay.
I just don't see GJ on futures. I don't
Oh, they don't have it.
I don't see a GBP JPY on futures.
Okay.
Yeah.
Okay.
So now I trade GU and gold on futures.
Okay.
And um and then Oanda, I can't trade indices.
Oh, wow.
So I know, right? I can't even trade gold. I can't even trade gold on Oanda. So I
Sheesh.
just trade my currency pairs on Oanda. But I'm able to, although the leverage is smaller,
Mhm.
I don't have to have a certain amount in my account to really trade it. But I mean, it's no different. The whatever I put on one, so if I'm trading GU on Oanda, I set the
Mhm.
same trade on Trade Station.
Okay.
Yep, I set the same thing on Trade Station. So no big difference.
Okay. Because
No,
Neil, he only trade gold anyway, so it
yeah.
would
And
nothing.
it's forcing me to trade gold on Trade Station,
Okay.
but it's all good. I'm learning to trade gold, and honestly, it is no different than anything else. I have to say that.
Okay.
No difference. It just moves. It just move um Like gold, what I'm learning is gold respects imbalances, fair value gaps a little more than my supply and demand, but I'm still
Mm-hmm.
gonna always trade supply and demand.
Supply and demand.
Yeah.
Okay.
Yeah. So if it doesn't
Yeah.
come back to my supply and or demand, then it just doesn't come back.
Okay.
I don't take
Another.
I'm not I don't always take trades every day. So
Okay.
the difference. I know Neely's a more of a
Scalp.
yeah, he's more of a scalper. So he can find
That's
those.
why I had that little ugly chart. Like you like finesse on the 4 hour because he's helping me. And he looks at, of course, those smaller. He call y'all long time frame
Long-term
MS.
traders, swing traders is what we are.
Right.
Yeah, see, I can hold a trade for a day or two or three.
Mm-hmm.
If I can find it early in the week, then I can
Mm-hmm.
hold it out. I can hold it out. What I know about or what I think I know about the charts is usually it moves one way for the week, and generally on Friday it starts to go the other direction. Don't ask me why. Don't
Wow.
I don't and I've heard maybe I've heard somebody say that. Um so that's kind of maybe where I got that from, but
Can I add to that?
yes.
I mean, Todd used to always say like the turnaround is around Tuesday, Wednesday. I have noticed a turnaround Wednesday, Thursday. So during midweek, it should have made a or taken out a high or a low, and then it turns around.
And see,
Once it did that,
I
yeah.
generally don't look at the charts until market close on Monday. Like I don't look at the charts on mark at 6 o'clock on Sundays.
Okay.
I
Yeah, I
gen-
don't do that anymore either.
I generally don't look at it on Monday mornings unless I see somebody say something in the group, and then I'll go look and see if, if I see the same thing. If I see the same thing, then I might trade it. But if I don't see the same thing, I shut it off and go on about my business and wait till market close on Monday.
Hmm.
And then I'll start looking at the charts on Tuesday, Wednesday, Thursday. And if I hadn't made a move by Thursday, now I did make a move on Friday only because it was in my POI. And because it was in my POI, and that was on gold, um, because it was in my POI and it shifted structure, I
Of
set
which time frame?
um
On the 1 hour or the 4 hour?
it was on the 15 minute
What?
because that's where I look for my entries. So once price came to this zone right here, this zone, this little black zone right here, and then I saw this bullish move with an imbalance and an order block, and this wick here, I set a limit right here at this little order block here. It tapped me in and
Yeah.
I got out right here.
Yeah, I can see that.
I think it was even a 5 minute supply zone right here. I got out right here, right there. I made a little $500, $571 for one day's of work. Look, for one day of work.
Wasn't a bad
Yeah,
thing.
that's good.
Okay.
I need that.
I know. ASAP.
Exactly. See, that's what I'm saying. And then I wasn't even looking. I was actually doing some other stuff on Friday. So just FYI, just in case, I'm a makeup artist also. So um
Humble flex, humble flex.
no, 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 no. But on Friday, I was literally like with a client all when I say all day, I mean all day for like 8 hours. So, um, so yeah, that happened, and that was my day. That was
So
it.
the 15-minute is your
Entry.
entry,
Mm-hmm.
and once it actually shifts structure on the 15-minute, what did you just saw the order block, you didn't see it actually breaking. What high was broken?
There was no broken. This was the high right here. This is the swing
Right.
high, and that's why I
Okay.
only took it to because around here was like almost market close. What time was it? 4:30. So at 4:45, it took me out. So right before the
Took
market
you
closed.
out. So basically you actually set your TP on that high as
Yeah,
well?
yeah. On
Okay.
this one, no, this one right here.
Yeah.
That yeah. So um so yeah. So my TP was really up here. This is where I wanted it to go. But because it was market close on a Friday, it was a Friday, I knew it was going to move slow at the. So I said, let me just take my profit and see what happens. So based on market structure, this is the current structure that we're in. This right here. This is the current internal structure. This is um and what I will be looking for, I will be looking for this one has already been mitigated, right? This is my last down candle before this up move. So I marked up this one. This was the violated order block. There was a bearish order block, wasn't respected, violated, broke through, broke this high, this internal high. So I would be looking for price to pull back where I have this green line back to here and go and buy some more. So once the market opens, I am going to set a limit on this right here. And then I'm going about my business. And of course, I'm going to put my stop loss below here. And I'm going to I'm going to take it all the way up. I'm going to see if it goes all the way up. Because at this point, if it breaks this high, this swing high right here, it's gone.
Mm-hmm.
Yeah. So this is what, and maybe I should like, well, what I'm about to teach y'all is you always want to put it below the swing low, but, and what's that, 53 pips? I could put it
But
below.
Kim don't do what she preaches.
Yes, I do. I do. I'm gonna put it below here. I'm gonna put it below here. Because this could easily come
I'm
back
just
down.
messing with you.
This could easily come back down because this is structure, right? This could easily come back down, create a double bottom, and then go up. So I will put it below here. I will. Because if it comes all the way down here, then at that point, it's probably going to start selling. Okay. But what I'm going to do, I'm going to start off with ACAD. Always, always, always. When you get on your chart, identify your bigger picture. And the bigger picture for me is price broke this high. This is our break structure here. This is our swing low here. And this is our swing high, right? Is everybody in agreement with that?
Yes.
Okay. And everybody understand why I'm saying this is the bigger picture. Any questions on that? Actually, let me do this right. Let me do this right.
Now, I know on that last one, y'all were talking about like the wicks. Is that something that, so if you're going to mark the wick or if you should do the actual candle or if the wick was going to be a swing high or a swing low?
So, and that's why I'm redoing this right here. So
Oh,
this was the high. This pulled back. this high did not get broken until this candle right here. This candle closed above this high. Remember, the anatomy of a candle is the open, close.
High and low.
You have the open. This is the, well, hold on. Let me do this. Let's just say this is supply. Okay. And then let's put this one as demand. All right. So this here is the open of the candle. So the body, when you have the body, it has an open and close, right?
Mhm.
So for a bullish candle, the open is pretty much the bottom of the candle or the bottom of the body. This is the open, right? And then you have, once the candle closes, depending on whatever time frame it's on. So if it's on a 1 hour, then once the 1 hour closes, once you get to 3:59 and it closes, this is the close of the candle. And it's vice versa for a bearish candle. So this is the bullish candle. So once this closes, it automatically opens to the next candle. So this would be an open, and this would be the close. Okay. All right. So now the wick itself, and let me just turn that back. The wick itself is, you have the high of the wick, and then you have the low of the wick. Okay. And that may remains the same on a bearish candle as well. So you have the high of the wick, and then you have the, oops, and then you have the low of the wick. So whenever I'm marking up, I'm always marking the high or the low of the candle itself, meaning the wick. And sometimes you will see a candle that does not have a wick, or there's a very small wick that you have to zoom in on. I'm trying to see if I can find one. Like this one right here. This one doesn't have a wick on it, right? It actually has a wick on it. You just can barely see it. I can see it. You see it right there?
Where?
Right there. You see it? I
Yeah,
know,
I see
right?
it.
Wait a minute, hold on, because there it is right
I
there.
see it
There,
now.
see? And that's the low of the wick. That's the low of the candle. So, um, oh, there it is. So that's the low. Right here, right there, it doesn't look like it has a wick. But if you zoom in far enough, or if you hover over, remember when we were learning the candle, if you hover over, it tells you right up here the low of that wick, which is 0.99282. And then the open, because this is a bullish candle, and it mean it opened here and then bought up here and closed, right? So the open is going to be here is 99289. The low is 99282. So that tells you that the open is higher than the low, right? Yeah, does that make sense for everybody?
Yes.
Okay. Okay. All right. So whenever I'm marking up my swing highs and swing lows, especially higher time, not even especially, all of my swing highs and swing lows, whether it's internal or external, I mark up my swing high and I just carry it over until a candle closes above there. Right here is where that candle closes above, right? So that was what I consider the breakup structure. So now my structure is here, here, and then I pull this back, and then the next breakup structure is right here, right? So then I can mark up here. I can pull back here. The next breakup structure is not until, let's see where that is. So this was the highest point. It broke structure here. This was the highest point. It broke structure here. Okay. And then here is the highest point and oops, highest point, and then it broke structure here. So when I'm looking at the structure, I'm looking here, 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 here. So once I see a shift in any of that structure, like right here, then my thought process is to shift and look for sales. But as long as I am getting bullish structure, I'm looking for price to pull back, keep buying, pull back, keep buying, pull back, keep buying. Once I get a shift, now I have shifted my thought process to look for sales. So once this shift happens, and this is why you don't win all your trades, because sometimes it doesn't happen the way it's supposed to. But once this shift happens, right, then I'm looking up here. That's my supply zone. I'm looking to sell from there. And
Why?
because it gave me this market structure shift right here.
And
And so
you
I'm
sell
looking,
high and you buy low.
you sell high and you buy low. Absolutely. When you're going bullish, you're buying low, right? And keep pushing. You pull back. Once it breaks structure, I'm looking to buy low. I'm looking to buy from here up to the next high. Generally, I take my TPs up to the last high. So this was the last, well, let's say this was the last, this was the break of structure. Okay. So I mark up my zone for my pullback, my supply, my demand zone, and then I take my TP up to this high. So once it comes in here, I take my TP up here. That's 500 pips. We're on
Question,
we're on the weekly, but same concept.
question.
Yes.
Your demand zone, that particular red candle, the last red candle,
Yeah,
down candle, I guess.
you can do that one. I just did
Um,
I just did this one here because
which one, the green one?
I know I'm on the weekly, but when I go down, I'm looking for my last red candle.
On what time frame? Like where do you, since you said earlier your entry is on the 15-minute,
Yeah.
so you refine it from the weekly, you figured out, okay, this
Yep.
is, the spot.
Yep.
But then you go down to what?
And then I go down
Daily,
to,
4 hour, 15-minute,
so it all depends on, oh shoot, it's not showing. I don't think I'm able, oh darn. Okay. So I can't
yeah, it's
down to the
too
15-minute
long.
on this one.
Mm.
I can't even go to the 4 hour. Well darn. Okay, let's go back
And
to
it's
the
for the
daily.
daily,
Yeah.
right?
So yes, so um I would go, this would likely be the one that I would have selected. It didn't get
Okay,
it
so
didn't get
right,
there.
that one
Yeah.
didn't get hit.
Yeah.
That was my question. So basically, if you had stayed on the weekly, can you go back to the weekly, please?
Uh-huh.
Because on the weekly, if you had actually marked the entire down candle, including the wick, then you would have gotten tapped in. The
This one
red
here.
candle, yeah.
Yes.
Yes, you would have been in drawdown if you actually but
Yeah, that would
if
have
you hit
been
the body, can
that's
you refine your green box down to the body?
okay.
Would it hit it?
Like 135 pips. Let's see.
Yeah, that's high.
Nope.
Yes, right there. It wouldn't have. Okay.
Nope.
Yeah,
Yep.
that's what I wanted to know, like
It missed it by like a
a
pip.
few points. Yeah. Mm-hmm. What, 2 pips, 3 pips? Two.
Mm-hmm. A pip and a half.
Mm-hmm.
So yes, so I definitely would have missed that one. But once and that would have been a loss. It wouldn't have been a lost trade. It wouldn't have been a trade at all, right? So
Right.
I'd rather be in a no trade than a lost trade. So once price broke that, now on the weekly, once price broke here, but there was no real demand zone, which what I look for is an order block along with a fair value gap. So because price broke this high, there was no fair value gap. There's an order block here, but this has already been mitigated, right? This right here, um, this would have been considered an order block, but even that was already mitigated. The best zones to look for, now of course, if you go down in time frame, you'll probably get some order blocks with, with the fair value gap. But the best ones to look for, because the higher time frame trumps the lower time frame. So if you see a zone pretty much like this one, or even this one, right? If you see a zone that has an order block and a fair value gap, that's probably the best indicator that price is probably going to move from that zone. Now, I'm going to swing this over. You see, that wasn't true, but but those are the areas that you look for when you're going in that direction. But now that market has shifted, I wouldn't even be looking at this. This was a market structure shift. So now I'm looking for sales. And of course, we're on the weekly. This would have taken 500 days to come back, right? Once this shifted. This took, did that tap it? No, that didn't tap it. This took a whole year to get over here. 300 and almost a year. 300 days to get back over here. But once you had the shift, and I'm going to work on showing y'all how to do the counter trend trade, right? But let's go down. Let's see if it'll give me on the daily. Okay, so this was the market structure shift. As a matter of fact, there was a little imbalance in here at this order block right here. And this was the low of this zone, of that zone right here. Okay, so price came into that zone and then shifted, gave us our swing right here. And we'll talk about that later. But you have the shift in structure here, right? Internal structure, because it didn't break this low. This was the last break of structure to the downside right here. And I don't know if it's gonna let me go on a 4 hour. I don't think so. No. Okay. So I'm showing that there was a break of structure. Once you know the charts, you'll know it's a bearish order block. Price closed below this low. So that is a break of structure. Okay. And then this was the highest point before that. So this is where market structure shifted. Now on lower time frame, you might have some internal moves within here. Um,
Quick question.
yes,
Those two green lines, is that a POI or what are those?
that was the high. That was the high of this order block where there's a little imbalance, fair value gap. And this, and let me do this right now. Great question. Thanks for, and swing low. I'm gonna just put that as the swing low. This one is
Okay.
the swing low. This one is the demand zone, the daily demand. Daily demand high. Okay. So now that price was in that demand, that daily demand, it didn't break the swing low. There's probably some lower time frame. Matter of fact, this is probably because this was a low and then price closed below it. Probably on the 15-minute, it's structure, right? But I can't see it because it's not allowing me to. And then there's a shift right here. Like price came, pulled back, closed below, broke structure, and then shifted structure. And I'll look closer to where price is to see if I can show you another place where that could happen. Um, so then price pulled back, swept this low. This was the low. Swept this low. Price, nothing closed below it on the daily time frame. On the 4 hour, it's probably closed below. 4 hour or the 1 hour. This is probably a close below. So once this shift happens, and then it's pulled back a couple of times, and then this shifted, now you're starting to see bullish structure. So you have this structure here, You have here, and you have here, and then you have here, right? So as you're entering, because remember, market structure shifted, so we're looking for bearish moves, and we've already marked up the zone where we're expecting price to pull back into, and I'm just going to mark up my daily. This is the last up candle before the down move. So I'm expecting price to come back into this zone and then start selling because I'm looking for sales. Now, if you're trying to enter into this counter trend, this bullish counter trend, because market sure shifted, right? This is where I would be looking for the counter trend. The last down move didn't pull back, right? The last down move pulled back. Or did it get us in? Let me see. Let me remove this. This was the last down move. Didn't get us. It well, let me say this. Oh, yes, it did. It was a sniper. But um and also depending on the spread of your broker, it could or may or may not get you in. All right. So price went up, pulled back because it broke this structure. You, as soon as you get a break of structure or a market structure shift, same here. When I got this market structure shift, I immediately marked up my supply zone. And I always make it red so that I know I can look for sales. Okay. So this broke structure, mark up my zone. Once it breaks structure, I mark up my zone. Now, this is a big zone right here, demand zone. Of course, I'm never going to mark up that much zone. That's how many pips? The zone is 131 pips, which is crazy. That means you have to put your stop loss down here. 131 pips. Um, and it's up to you. Of course, I would go down in time frame. If whenever Tide comes back, he's probably going to teach you um to trade from the imbalance or to trade from these imbalances. This zone I probably wouldn't have marked up. Maybe on a smaller time frame, it would have given me something to mark up, whether it was here, whether this was a red candle up in here. I need to see the two different color candles. Okay. So that did pull back into the zone and then pushed up, right? Now, mind you, I'm waiting for price to push in here. So once I got,
Question.
uh-huh.
Sorry, question.
Oh, go ahead.
So it tapping into that big zone from that big red candle.
This right here.
Yes.
Uh-huh.
Now, the green candle basically tapped us in, right? Or even the
Oh, actually, this
blue
red
candle.
candle,
Yes, those
this one
candles
popped in, and then this one,
tapped us in.
and this is 3 days, 3 days of popping in, popping
Yes.
in, and then taking off.
How many pips is it from that green candle low? Yeah, up to that high.
Okay. Oh, to the,
To the high that it gave us.
okay. Um, so that one just to this high, the next
A
high
little bit higher.
would have
Yeah.
100 pips, and then the next one is 189 pips.
Okay.
Yeah,
Okay, thank you.
you're welcome. Great question, Sophie. So now that I have the structure, so as long as I have bullish structure, this is bullish, bullish, bullish. I'm looking, the next zone I'm looking at is because this broke structure, right? So I'm looking for price to pull back into here and start buying because I want it to go into this zone. But what happened after that? Y'all got it. I know y'all know it. What happened after the this bullish structure, this last bullish structure?
The market shift.
Yes. You had a market structure shift right here. So now what do I do? And this is the swing high. Now what do I do? Once I got the shift, what do I do?
You mark up your swing high and swing low
Uh,
in your supply zone.
yes. Come on, David. So now that I got the shift, I mark up my supply zone because now once I get the shift, I'm looking for what kind of moves?
Uh, bearish.
Yes. So I'm looking for bearish moves. Now, I marked up this supply zone. Price broke, price shifted. Price was pulling back, but did not come back to this bearish zone. So now I have a break of structure from that low. This is now the swing high. And let me just copy and paste that. So now this is now a swing high. And this is now a swing low. Okay. And then we're just going to pretend like we don't see all of this that happened. Right, right. So now that I have this move, I now that I've price didn't pull back to here and then broke structure. So now I have a new zone that I'm looking for price to come back to start selling. Okay. Price came to this low, price started pulling back, and then price broke this low. So now I have a new swing high and a new supply zone. Okay. Now, one of the things I generally, this is why I don't like to counter trend trade because if it doesn't come back to this zone, I'm then chasing the price down here. So this was pretty much some crap. Okay. So what I normally do is once I set this, because now this is just manipulating the market, right? This you got in on this trade. If you were looking at price action, and that's the part I said I haven't really discussed yet, but price action is just a break and retest. This was the last move. This was where the first move started happening to the downside, right? This was the really the first um shift in structure of this where market structure shift happened. So price action is And it's really just and this is probably the best way to tell you. Did I talk about support and resistance in here? Did I? I think I did. Maybe.
Not really. Maybe I don't really remember us going
Okay.
about
Okay.
something.
No, yeah, look, y'all, I'm teaching like four groups, okay? So,
I know.
Can I
so
ask a question though,
yes.
please? Can you make the chart a little bit wider? Because
Mm-hmm.
right there, you just made yes, the red line that where you made your
Right here.
break structure. Yes.
Mm-hmm.
If you remove your black box
Yep.
for a moment, right here, I would have considered this being the first break of structure. Because this is a low, right? And it broke below.
So
And
I
then also it came
I
after
wouldn't
the one that you did.
so I wouldn't have considered that one because
Why?
because I need to see structure. This would have been the last daily structure. And it's close. You're still close, but I would have marked up this as my low. This was the breakup structure right here. If I'm looking at the internal moves, I have this price, then price broke, right? And then pull back, and then it broke, and then it pulled back, and then it broke. That's the structure I would have been looking for. So this would, to me, would have been the first internal, oh shoot. This would have been the first internal shift of structure right here.
Yeah, so what did I say? Wasn't that what I said?
Um,
Okay, so I took the other wick. I took the
yeah,
middle wick,
yeah,
but
yeah,
I
yeah.
meant this candle that you had here too. That one.
Yeah, so that
I
one,
meant that one. Mm-hmm.
yeah, yes. This candle would have shifted the structure.
Right.
Correct.
Like I did go past by this one. However, I meant this candle did actually do the
The break.
break of structure. Yeah.
Yes, but I also just want you to understand that this was the structure,
Mm-hmm.
right? That was the actual structure for this break to happen. And then price pulled back into the last up candle.
Mm-hmm.
Once it shifted this structure, pulled back into the last up candle, and then sold down. So, yes, yes. And you could have taken that down to either this demand zone here. As you can see, it sold all the way back down. It took out this low. This is where the structure the higher time frame structure shift happened. This was internal because this was the higher time frame structure from here to here to here.
Mm-hmm.
You had this internal shift, so you can take it down to this low. You can take it down to this low, and the the premise is that price is going to pull back down to, because this was the low, to a discounted area.
Mm-hmm.
But instead of, and it did pull back to the discounted area, but it also shifted this structure. That makes sense? Everybody get that? That makes sense, Elfie?
Yes. I think yeah, it does. Mm-hmm.
Okay. Okay. And does everybody get the part where market structure shifted this internal move for this pullback to what we would have been looking for it to come back to the 78 or 88? Or some, let me just say that. Let me, in the discounted area. We were looking for it to come back somewhere in this discounted area, right?
Right.
Mm-hmm.
And as it was pulling back into, so once we got this shift here and it pulled back into my supply, and I'm just going to delete that for now. Or let me do this supply and pulled back into the supply. Now you have this counter trend of this bullish structure. So now you start marking up your structure. Price did not break to over here, so we're going to take that here, pull it here. Price did not break here until after here. So all of this is the bearish structure pulling back into this bullish structure. Once price shifted or closed below this last swing, which was over here, now we are looking for bearish structure. So now that this has happened, the next structure is this one right here. That's the next supply zone. So that is where you look for price to pull into to then sell. And you can take it from here to the last low because at that once this shifted structure, this was the swing high. This was your swing high. And then this was your swing. Well, actually, this became the swing low because it pushed up, pushed here. This was the swing low. So now that price pulled back into that zone, you could have held it. This is a swing trade, okay? But you could have held it to this low, at least to this low. So, with that being said, let me push this up here. Zoom this out. And we're just going to see how long that would have taken. So, from here all the way to here. That was 71 days.
Ooh.
A little over 3 months. 71 days, 772 pips. Now, and I say this all the time, I can swing as long as it's in the green, it's in the blue. As long as it's in the positive, I can swing, I can hold a trade. If if I start seeing any kind of negative, yeah, yeah. But again, 1, 2, 3, then you was in the positive. Then it came back 1, 2 more days, 1 day really, because the second day it you would have been in the positive, and then you would have been in the positive um, from here on out. Because if you're trading a trend, price is going to pull back and move pretty swiftly. This was all manipulation right here. Matter of fact, there was like there was liquidity all up in here. Like just even right here. That was all liquidity. Stops up here, stops up here, just and it came, took it, and then left.
Or you would have held it the whole 71 days.
Probably not. I probably would have taken mine at this low right here.
Mm-hmm.
Um, because this was structure. This was structured into this. So I would have needed to make sure it wasn't going to now, although this right here was confirmation that there was a market structure shift, I needed to make sure that this wasn't coming here to pull back and then sell.
Mhm.
Now, I do not trade patterns, okay? I don't trade patterns. But, and the reason why I say this is because if you're a pattern trader, it's it's like a head and shoulders,
Mhm.
right? Price come, I would have been expecting price to pull back and then sell. So I would have at least taken my profit somewhere down here. Um, there's a little demand there, but I definitely would have taken it to here. And
How
then
many pips is that?
um 428 pips.
That's a nice look.
Mhm.
Mhm.
For how many days? 58.
Um, let's see. Hold on, let me take my little magnet off. 47.
Hmm. You already forgot you had that trade.
Huh?
I would have already forgot I had that trade.
No, you wouldn't have.
Yes, I would. If
No,
it's not blue, it's like,
because it would have
boy,
you
yes, it's blue.
no, you would have been looking at that. You would have been looking.
I would have probably seen like
And
where can I enter again? Like,
that's the problem. Okay, we're gonna get there. We are
okay,
gonna get
sorry, yes, I'm sorry.
there.
Yeah, yeah.
Because technically you should not even want to enter another trade until it breaks structure. You want price to either break your high or break your low before you put in or look for another entry. Just like here.
But look, it
Okay.
did break structure over here. Where's my thing?
We're right over here.
It broke a low.
It did.
There you go. And it gave you an order block.
It broke a low, but then
Uh-huh.
where is the supply zone that hasn't been mitigated that you would have marked up?
Stretch your thing, make it bigger just a bit.
Sure.
Sup-
Sure.
Supply. Okay, let me think.
So you're saying
So
so you're
this right here,
you're saying it broke here.
yes. So
Mm-hmm.
you could have entered technically right here. Well, yeah.
What?
On this candle right there. On this one.
Okay, so I ain't gonna
I
say no
would have
names.
tapped into that order block
I ain't gonna
nicely.
I ain't gonna say no names, but
You know, that would have been a top move right there
I
too.
ain't gonna say no names.
Right. Okay, okay. I'm just saying.
See,
My bad. Okay,
this is
I'm
why I need
sorry.
this is when I need Todd on here. So
I am so sorry. Let me just
because I look, I miss Todd. I miss not having the fight with Todd, okay?
really, you do.
I do miss not I do miss
Oh
fighting with
wow.
him. Okay. But at this point, this is at a low, right?
Uh-huh.
But what does that mean?
It could pull back. I can see that point.
Yes.
However, let's see what day. Okay, so that's a Friday.
This candle
Ooh.
right here was
No, the
on
other
a
one, the one
Thursday.
that tapped in.
This was on a Friday.
Mm-hmm.
Yep. Yep.
Perfect.
So, um, so yeah, so once the day ended, yes, you could have marked up this order block or supply zone, right? And it would have pulled back. I get it. I get it.
Okay, I was just, yeah.
But for me, if I'm looking at my internal move, price push down here.
And it even took out the high of the previous day.
Yeah, I don't do that. I
Oh,
don't look, I don't,
okay.
that's,
Let me
that
hush.
just,
I'm
that
gonna
just,
hush.
that complicates, that gives me a headache. Like it took out and I get it, and I teach it to y'all because I know that's how Ty would teach it, right? Um, and it did take out this day. We took out this previous day high. I get it. But on a smaller time frame, I would need to see. I don't care about whether it took out the high I don't care about that. What I'm
What?
looking for, no, 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 no. I don't. I don't. Even when the day, so this day took out this high, right?
Mm-hmm.
And if I go by Todd's strategy, this day took out this high, but then so
Mm-hmm.
did this day came and took out this high. So it went up even higher. So that's why I don't, that's why that don't,
But you can see that this order block held this entire move. Okay, now you just know it was the other one that I meant. Now
yeah.
you just move my whole thing. But
Uh,
I digress. I don't want to hijack the whole
so,
beginners thing.
so what I would be doing is looking at this push down, right? I
Mhm.
just need to see some form of structure, meaning price pulled back and broke. So this was a bullish structure, and then price came and shifted. That's what I have to
What do you
see
mean
each
it
and every
broke?
time.
But
This
why you say it broke if it didn't?
this right here broke structure.
Oh, okay, but it didn't break this right here. Where's my pen?
It didn't break this high.
It didn't break this.
It didn't break
Yeah.
this high, but it gave me bullish structure to the upside without
Hmm.
breaking this high and
Hmm.
then shifted structure. That's all I need to see. That's all
Okay.
I need to see. And then once I see that, I immediately am going to now I already know because I'm in my red zone. I'm in this
Hmm.
zone.
Hmm.
I'm looking for a shift of structure at some point, right? So whether I'm on a smaller time frame and I can see this shift, because I'm not going to see that until there, right? On a smaller time frame, it's probably right here, right? So once this shift happens, on this is these candles are probably closed candles on the 4 hour or the 1 hour.
Okay. So that particular shift that you just picked,
Mm-hmm.
see, I think that's where I have my trouble with structure in that sense where why did you pick this red candle and not any of these other
Because that's
ones?
the lowest point right here. This was
Okay.
price pushed up to here. Hold on, let me delete this. Let me delete so we can see it. Price pushed, price was here, pulled back here, and then pushed up here. That was the
Which
highest
is a
point,
break.
right?
Hmm.
And then the lowest point, it pulled back here, and then it pushed up here.
So the lowest point as after this one has been done?
Yep.
Because why not this one?
No, because this is part of this move right here. This is part of this
Okay.
push up
So
here.
the lowest point after this one has been done.
Yes. And then that pulled back, and then it pushed all the way back up here, right? So this was the lowest point right here.
So basically, you're saying the lowest point that sponsors the new break of structure.
Correct.
Okay.
Absolutely. Great observance. Great questions. And so once this happened, like I said, on the 4 hour, which is where I look for pretty much my shift of structures or breaks of structure on the 4 hour. But because we're so far back, I can't really go there. Um, Once this happened, then I would have marked up this candle here.
I think my question is, if I may ask this question, like
Yes.
in that timeline that you have, how do you know how far or wide to go? I think that's where I get confused because I understand the low, the high, the break. Well, I don't understand the low. Actually, I understand like how you marked it up, but I don't understand like how do you know where to choose or how wide to go?
What do you mean?
Like you see how you have this picture, how you just opened it up or you just kind of condensed it.
Right to here?
Yeah, I guess
Is
that's the thing I get caught up on.
this is my supply zone. This is my last up candle before this shift happened. So once this shift happens, I
Mhm.
automatically go mark up my supply zone, my supply or demand zone.
Oh, and that's why you're saying it was bearish.
Once this happened right here,
Went up and then it went back to, and then it was the highest point and then it went back down.
so I know that price is going to pull back. So I immediately mark up my supply zone. Me personally, I'm always going to pretty much set a limit and let it play out.
Okay.
So at this point, this was my swing high. I think I'm a little off, but this was my swing high.
Yeah, I guess, well, yeah, that makes sense.
So, or if you want to cover this high, you can. I mean, it's really up to you, but or what you're it all boils down to what you're willing to lose when you're setting your stop loss. So,
Okay.
depending on what my lot size is going to be, and we're going to get into that, would depend on what I'm sorry, depending on how many pips I'm setting as my stop loss will depend on the lot size that I use to take the trade. And like I
Okay.
said, we're going to get into that. So, um, let's just say here, I'm always going to round up to whatever, to the nearest. So this is 52, so I'm going to round it up to 55. Now, I'm on the daily. For me, a currency pair is no more than 20 to 50 to 40 pips. There should be the stop loss should not be bigger than 40 pips. But because I'm on the daily, 50 pips is not a lot for a daily. So price pulled into that zone and then started selling. So, and this is where I'm expecting the sell to happen from. So I'm always going to take it to the next low, the next swing. And this
I
was
have another question
yes.
after, I'm sorry.
No, go ahead.
So since we already had that zone from way back here,
Uh-huh.
right?
Mm-hmm.
Would you not have already put a limit, like you would have already had a limit on it, or
I
no?
would have
Or you
I would have
wait
at
first for
least
it to actually
I
show
would
up?
have at least marked up my zone. So
Yes, but
so and once price gets to that zone, like you can set an alert here, right?
is that what you do?
If I'm if I'm
You first set the alert and then you set the limit, or you actually set the limit once you actually determine your zone?
So if I'm marking it up from the daily, I can set a limit. So now I can, because its prices there, I can go down to a smaller time frame to look for, because I'm sure there's probably more structure within this daily green candle, right? And I'm just going to go here. So let's just say
Which one? The big one?
there's probably some structure in this leg. Hold on. There's probably structure. Oh shoot, it's not. It's acting like it's magnet. Within this last candle, between here and here, there's structure. There's structure somewhere in this candle on a lower time frame.
Well,
One,
why are you checking that candle and not the other green candle, the doji candle? No, no, the one to the right.
this one,
Uh-huh.
because you're looking for the structure in here to be shifted on the lower time frame. So there's probably some structure in here that got shifted right here, but I need to see it on a smaller time frame. I can't see
Which
it
we
on
can't
a
do
daily
right
in a
now.
daily candle. And not even just that I can't do it right here right now. Well, I can't. But yes, I would need to see. So when Todd says,
Well, you're picking that candle because that's the first candle that enters your POI.
because that's in my POI, correct.
Okay.
Yep. So when Todd says, once I get a daily sweep,
Yes,
right? So,
I agree
and
with that.
I understand that, but within that daily sweep, I need to see a shift of like this. I need to see a shift on a lower time frame from this sweep.
Hmm.
If I don't see the shift, I don't take it. But if I
And
see
you want to see the shift on which time frame?
if usually 4 hour, 1 hour, or even the 15 minute,
Okay.
because prices in my POI, I can go down to the 15 minute.
Mhm.
If I see a shift, meaning on the 15 minute within this candle, I see some, I don't know why that's acting like that. Oh, wait a minute. On that 15 minute, I see some, what is going on within this candle, and then a shift. This, let's just say this swept, this was a sweep, and
Mhm.
then shifted. Then I'm looking for my supply, which this probably pulled back into.
Mhm.
So there's probably a shift in here somewhere. And then this pulled back into a supply and then started selling.
Mhm.
But remember, you can only sell it to
The next
a
low.
higher the higher time frame sweep. I mean swing, internal swing. But then once price shifted the higher time frame swing, internal swing, then you're able to look for the next supply zone to then sell it to the next higher. So if you wanted to take it here, you could take it here. Then if you wanted to take it here, you can take it here. This could be your TP1 and this would be your TP2. So
Yes. Okay.
let's see if price shifted here, pulled back, the first TP1 136 pips. Or I mean to there 136 pips. Once price shifted, it pulled back to here 269 pips to here 400 and plus pips, 400 plus pips.
Mhm. Okay, cool.
Okay?
Yeah. Thank you.
You're welcome.
I'm out. Bye.
Have a good night.
Thank you. Good night.
Um, Leilyn, did that make sense?
It did.
Okay,
Thank you.
welcome. All right. So I didn't get to any other charts, but I just want to reiterate whenever you are looking at a chart, you always want to look at the higher time frame. You want to look at the bigger picture. And I'm going to erase all this so I don't have all this on my chart. Okay. So you want to look at the bigger picture, identify your structure. Okay. Just look for your swing highs and breaks of structure. Look for your swing highs and breaks of structure. Then look for your last swing high and break of structure. Okay. And then once you see that, you can start marking up your here, 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 and here. So now when you get a shift, okay, then you know what to look for next. Once you get a shift, look for your supply zone and trade it from there. Now, I'm on the weekly, same concept on the daily, same concept on the 4 hour, same concept on the 1 hour, same concept on the 15 minute. Okay. Look for your breaks of structure or your market structure shift and trade from your structure based off of your structure. But the purpose of looking at the higher time frame first is so that you know where you're going. So we know that this is bullish. We know from here to here, all the way up here is bullish. So we should be looking for price to pull back, which I think it did already. So we should be looking for price to pull back to a discounted area, anywhere between the 50%, 61, 78, 88%. This pulled back to the 61%, right? But when I look at the high, I'm still looking at structure, internal structure. This was the last low. Price pulled all the way up here and then pushed all the way down here. So I'm still looking at structure. So now that price has pushed down here, price pulled back to the 78, shifted structure right here, because this was the last bullish move up, shifted structure. So I'm going to continue looking for price to sell further down into this zone. So based on this shift right here, we had price to go down, we had price to pull back. We had price to go down, we had price to pull back. So currently the current structure on this weekly is that swing high, and it looks like price swept this high, but this is now, based on this here, the swing low, which price broke right there. Swing low. Okay. So price is either going to take out this high or because it did take out this low, we're looking for price to continue selling. Price close below this low. Actually, price closed below this low. And I'm very anal about, oh shoot. I'm very anal about looking for these higher time frame breaks, meaning close below, this close below. And that is why see, I gotta turn on my magnet. Okay. And price did close below here. This candle right here closed below this low. So now let me go look at structure. If I'm saying price came here and down here and then pull back without closing above and then closed here, and then came here and then closed here. This is my structure. Let me put that up here. Okay. So now this is my swing high because this closed below this. Hold on. So once price closed below here, this is now my low. And then price broke, closed below there. So now this is my swing high. So now price has to either break this high or come back and break this low. What I think is going to happen, I think price is going to break this high. That's just my thoughts. Like I said, it already pulled back to the discounted area. So I'm looking for price to, and it shifted internal structure right here, right? Pulled back, and now I think it's going to start breaking this high. So once price breaks this high, I will look for a demand zone. And I'm just going to put this for right now. It hasn't broken this high yet, so I don't know what it's going to do. But once it breaks this high, I'm going to look for a demand zone for price to pull back to, and then take it up to this high. Because we're in this bullish structure overall. Pulled back to the discounted area, so we should be looking for it to continue to buy here and even higher. It could go up there. Now, I'm a swing trader, but I'm not waiting for it to go all the way up there. But I would look to take it to my highs. You have this high here. You then have this high here. You then have this high here. And then you have this high here. So you can look to take it to the highs. Now, once price starts breaking highs, again, you look for the pullback to take it to the next high. Once it breaks this high, you'll look for a pullback to take it to this next high. Once price breaks this high, you look for a pullback to take it to the next high. So once you see a break of structure or a market structure shift, you wait for a pullback and take it to the next high or low. Does that make sense? Y'all ready to start trading next week?
Let's go.
Ah,
I'm just kidding. I'm just kidding.
look, I'm ready to start, y'all. Because me talking, just talking, it's not going to make sense until you get on the chart.
Yeah, I understand it. Yeah.
Y'all ready? Everybody else, y'all ready? David?
You don't have to be ready. Yeah. No
Yep,
time like
ready.
the present.
Yeah, I think I'm ready.
Okay. Okay. So, with that being said, um, do y'all have brokers or no?
So what happens if we say we're not ready?
Who said they wasn't ready? Layla?
Layla said, what happened? I know I just wanted to know what would happen. See what had happened was
What had happened was
I just wanted to ask.
what
No, let's do it. Let's do it.
so this is now, and I'm telling you, the old group, they will tell you like pissed me off, okay?
Uh-oh.
Because they were like I'm getting them in demo. Like, why are you afraid to put in a trade in demo? Like, I don't understand that. I don't
Right.
understand it. because the only way you're going to learn to be a winner is to be a loser. That's the
Okay.
only way you're going to learn to win. And the only way you're going to do that is to test the waters.
Okay.
And I'm saying test the waters and demo.
Okay, we're gonna start in demo.
Yes, you're going to start in demo.
I'm ready then.
Yes, 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 yes.
Demo, man, you
Who-
better
I'm
let them
ready.
niggas lose their real money.
Now that y'all see that? Y'all see.
That's the only way you learn. The only way you learn if you lose real money.
Okay, we're not gonna listen to Neely, okay?
I'm gonna mute him, y'all. I'm gonna mute him.
Let's start in demo briefly.
No, so the purpose of this is to start you in demo because I want you to first understand market structure. Once I think y'all got market structure, we're going to live. We're going to live. And that was my plan for the previous group, but they wouldn't even post a trade in demo. And I was like, if y'all want to post it live, you go ahead, go right ahead. Go right ahead. But I don't want y'all to do that, okay? I don't want y'all to do that. So, um, does everybody have a broker?
No, I don't.
You don't have a broker. Okay.
Oh, I don't either.
I don't either.
You don't have a broker. Um, okay, so now let me ask this question because we're either going to trade currencies or we're going to trade futures
Mhm.
or we're going to trade forex. So now the question is when we do go live, because the difference between currency and futures and forex is okay. I just thought about it. We're gonna trade forex. We're gonna trade forex. I know Neely's probably saying put them in futures, but I want you to be able to at least. So my goal is always to teach you or to like I'm not going to be the teacher to teach you how to over leverage. So I want you to learn, I want you to one, strengthen your psychology. And by doing that, it requires you to put in a trade. But I don't want you to lose all your money. Because if we even trade just $100, we can just trade a 0.01. Like that's just pennies to a dollar, right? So even if you lose 30 cents or you gain $2, like that is going to help strengthen your psychology. And of course, your psychology is a little different from losing $2 because I mean, I can go to the mall right now and blow a whole bag, but losing $2 wouldn't mean anything, right? But as you're able to grow an account from $100, and I tell this story every time I took $100 and took it to 30K in 6 weeks. Once you
Let's do that.
once you understand that, your psychology then becomes or goes to a whole nother level.
What broker we need to do that one? That's the one I want.
So you got to have a Forex broker. Now, the only difference with that now is at the time I had KOT. So my leverage was one to whatever the highest leverage it was 200, 300, 500. It was 1 to 500. But most brokers now require you to be a US. If you're in the US, it's requiring that you have a regulated broker. Most regulated brokers only have a leverage of 1 to 50. So you'll still be able to grow the account. You're just gonna be a little slower than normal. But I'm okay with that for especially for beginners. So I currently have Oanda. So this is how I chose my broker. I went here. I looked to see who had which one I wanted to use, and Oanda was. I looked at the ratings, and Oanda. I've never heard of this one, so I didn't select that one. I've never heard of this one, so I didn't select that one. AMP, I think they trade futures and Forex. Um, Forex.com I've heard of, but I selected Oanda. And I looked at these brokers because then I'm able to trade this from Trading View. I don't have to go to Trading View and then go back to another chart to trade from. So you can actually trade from Trading View. So with that being said, I have Oanda. Um, I'm gonna let you select which one you want. Also, what I like about regulated brokers and even with the futures, you're able to transfer funds directly from your bank account. With unregulated brokers, you had to convert it to crypto and then reconvert it to US dollars and then transfer it over. So, whichever broker you use, that's your homework for today. Find a broker, set up your demo account.
Got it.
Are you gonna give us some suggestions, or we have to research it or
Um,
screenshot this one?
well, you have TradingView, right?
Yeah. Uh-huh.
Yep. So you can or you can just check select Oanda. It's up to you. I don't want to
Okay.
sway anybody to, I don't have any
Okay.
in this fight when it comes to brokers. But like I said, I
Okay.
selected Oanda because Oanda is the chart that I normally use right here. You see right here?
Right. That's what I was thinking.
That's kind of why I chose Oanda because I'm trading on
Okay.
using their charts anyway.
So you want us to get it, and do we need to just tell you who we choose, or screenshot and drop something in the group?
Just you can just say that you have your demo account is created.
Okay.
Just for future references, no unregulated brokers. You said all of them are unavailable in the US now, so we
Um,
won't have that option later on either, huh?
so I think hold on, let me look. I think now I'm waiting for KOT to say what they're planning to do. Now, they just recently um severed ties with um Trade Locker. So I don't know. And then I messaged them. I'm like, all right, wait a minute, are y'all going away or are you? And they said they're not going away.
Okay.
But I don't know if they're coming back but not accepting US clients.
Oh, okay.
I don't know what they're going to do. Um, I know that in the main group, was it Hero FX? Hero? Let's see. Hero FX. I think Hero FX is an unregulated broker, but you can't trade it on um you can't trade it on Trading View. Hero X. Yeah, so it must be unregulated broker. Show all brokers. Now, if I see Hero FX on here, um, like see IC markets, fusion markets, like most of those are regulated. Yeah, I don't see Hero FX. So it's likely unregulated broker. And hold on, let me share my screen. I know that like Will and a couple of the other guys in the group use this one, but account types. Let's see what their trying to see what their leverage is.
It seems fine to be regulated while I'm learning, but once I learn it, I need to
You need to blow the back.
$1
But
billion.
no. But once you learn it, you can switch over to futures. That's all I'm gonna say. Then you'll be making the money.
Okay.
All right, that's it. Let me see what their funding methods. Yeah, see, you have to transfer this from crypto to trading methods. I looked at that. Trading assets. Let me go to the frequently asked questions. I'm sure somebody asked about leverage. Had to.
My battery's gonna die, so I'm gonna drop, but I will do what you requested.
Okie doke.
Thank you.
Welcome.
All right, bye-bye.
Yeah, I don't know what their leverage is. Yeah, I'm not sure what their leverage is.
Okay, that's fine.
So let me see. Let me go to chat. Chat GPT. What's the leverage for Hero FX trading? So they go up to 1 to 500.
Okay. Just for future, references.
Yeah. Yeah, I would blow that bag. I would blow it. So yes. So now for testing purposes and training purposes, we're going to use, let's just start out with Oanda. And I don't know what just happened. Hold on. Share. Okay. And then we'll do demo for somewhere between 4 to 6 weeks. And then we will switch over to live.
Dun, dun, dun.
So yes. So every week we get on these calls, I'm going to go through a pair Just go through the same thing over and over again. So y'all can hear me say it over and over and over again. Look at the big picture always first, um, to know what structure we're in. Then we start walking it down or doing what's called the top-down analysis to then see where we are in the market. Because as you can see right here, there was this structure, price pulled back into the supply zone, shifted structure. So we should be looking for price to pull back and sell. I am also going to I'm going to add a starting next week, support and resistance on the higher time frame only though. Meaning, does everybody understand support and resistance?
Yes.
Anybody who don't understand support and resistance?
I don't know if I completely understand it.
So support and resistance. So price is attracted, I mean, the market or the charts are attracted to specific prices, whether it was back in 2011 or whether it was in 2017. Price, there's a magnet to where price reacts on the charts. So if you look here, the way I just marked up, this was resistance, became support. This was resistance, became support. This was
Mhm.
resistance, and then became support. So this is a key level for this particular pair, AUDJPY, that price likes to come back to and react. So if you mark it up on your charts, and I usually mark up the higher time frame, usually the daily. I like to mark it up on the daily. Some people use the 4 hour, some people use the 1 hour. I just know when price pulls back, but I'm also very aware. So I respect support and resistance. Let me just say that. I have to. I have to respect it. But I'm still looking at my structure. This was the break of structure. This is the swing low. This is the swing high, right? I'm going, and then once I'm looking at this daily, I'm looking at this demand zone right here. So I'm expecting price to pull back into that zone. But as you can see, price created, this was the swing low. Price came to it. I don't think it did. Did it? Did it sweep it or not? It did. So it did sweep that last swing low. So I respect that price is going to come back to that zone. It's just easier to know that price is going to, when you mark it up early, you just know that price is going to come back even with structure. This is the structure. You just know that price is going to come back to that zone.
Mhm.
So you have to respect it. You have to respect it. And if I wasn't looking that far back, I would say, okay, this is my swing. This was a level of support, but then this was also a level of resistance. So this is where I would want price to come back to. You don't have to always look back all the way to the back, but right here, this was resistance, this became support. Once this pushed up, you can mark up your zone. And once price gets back to that zone, you can wait. You can look for structure. Look at structure. So if I go down to the 4 hour, or go down to the 1 hour, which is where I would normally do. So on the 1 hour, we had this break of structure here, right? This last 1 hour break of structure. And then we had this shift in structure. So now once we get a shift in structure, we know price is going to pull back. This pulled all the way back. Um, and then we had another break of structure. Then it broke up here. So now that we have that break, I would be looking for price to pull back somewhere in here and then buy some more. So price is currently all the way up here. So once price pulls back to that zone, this key level, I'm expecting price to pull back to here and then back up to this high. That's the thought process, right?
Mhm.
But price can always, I always say that fundamentals can always change that thought process,
Right.
right?
Mhm.
So if I'm looking at daily right now, this is the swing high and this is the swing low. Going on the bearish side, right? This was bullish. This pulled back, pushed up, broke structure, pull back. So it could come back here and buy or break through this low and continue selling.
Okay.
If it breaks this low, then we're looking for price to possibly, where's my little thing in the jiggy? So if it breaks this low, then I would be looking for price to come down, pull back as resistance.
Continue down.
Yes. But I would wait for price to get in here. I would look for some lower time frame structure and then get in for the sell. A lower time frame shift in structure and then look for the sell. Does that make sense?
It
So
makes sense, yes.
so that is support and resistance.
Mhm.
And like I said, I just like to add it because I do respect the levels for a particular pair. Like any pair you go to, you'll see there are certain levels um, that price comes back to react. But I also am looking at let's just say right price came here, support, it broke through, but then broke back through. So I would be expecting price to come back to this zone. Now, the zone also has this demand zone right here, right? So price could come into the zone, bounce it back up above this as support, and then so this is how I made the 30K in 6 weeks. I traded support and resistance. I didn't know nothing about market structure at the time. Okay. I did it basically purely off of support and resistance.
I have a question.
Yes.
So when you're using support and resistance,
Uh-huh.
and when price comes into the support zone or the resistance zone,
Mhm.
are you looking for order block before you enter the trade?
I'm looking based off market structure. Once price comes into my zone and I'm looking at structure, swing highs, swing lows, if I get a swing, if I get price to come up here, I look for it to come bounce off this zone and then take it up to the next level of support and resistance. So my next level of support and resistance would be right here. So I would take it from this zone to the next zone. That's how I made 30K. From one zone to the next zone.
Okay, I got you.
And when looking for those levels, if you have to um if you have to squint to find it, meaning, I see some people say, "Oh, well, here's a level here," and it is a level, right? But and you can use that as a level. You can use that as a zone, so you can trade it from here to here. That's fine. But if you have to squint and say, "Oh, wait a minute, I think I see a level up in here," like if you're going all into here, I'm telling you, you'll have a bunch of levels or zones on your chart. Just trade it if you know market structure, and that's why I always teach market structure first before I teach support and resistance. Um, but if you know market structure, you know that this is the internal structure, right? Price didn't break this low, and if price starts pushing back up into here, it's probably going back up to this high. Whether it's going to break the high or not, it's part of the structure. Now, price could this for this pair right here, price could buy back up into this zone right here. And how I did it was once price got to my zone, I sat on my hands and waited for price to move. Like I said, I wasn't understanding market structure at the time. But now that I know market structure, I mean, it's almost, I don't want to say you're not gonna lose a trade, but if you're looking at market structure, your percentage of your trading percentage just goes up a little higher. So once you get these higher time frame, oops, once you get these higher time frame levels, then you just wait for, and let me tell you what I did. When price was in the middle, I set an alert at the bottom. Like I would set an alert here, and then I would set an alert here. Whenever the alert went off, that's when I would look at the chart. And now that I know that I'm probably looking for price to come back here and buy all the way back up to here, but I can just take it from one zone to the next. I mean, really, that's it. And then once price breaks above the zone, like I said, once it breaks above the zone, meaning it's up here, I'm looking at the structure, right? What you've been learning. I'm looking at the structure. So I'm looking for a pullback for a continuation. Now I have new structure. Me personally, I only like to put in one trade. Once price breaks above this structure, come back to the zone. I really want to just take it all the way up to the next zone before I put in another trade. So from starting next week, and like I said, I couldn't remember if I was teaching that to y'all or somebody else. Um, I will be adding these levels of support and resistance based off of market structure. And you see how I marked it up, right? This was the swing high. Well, I did and then I didn't. This is the swing low. You'll see. You'll see. You'll see. You'll see how it as we go into the weeks, you'll see how I do it.
And is this the pair? I think you told us we were going to start with some pair that move pretty regularly, I guess. Is AU, is that the pair we're going to be starting with the trades or
So,
practicing on?
so GJ is my pair. Big
Oh,
GJ
GJ. Okay.
is my jam. Okay.
Okay.
Because that's what I made that money off of. That's what I made 30K.
Okay. Okay. Let's go.
So, um, and then I just know GJ like a book. So, but it's still the same. You can trade anything, to be honest with you. This I do it with anything. And I'm learning that the same thing with gold. I'm just gold, like I said, um, tends to trade based off of fair value gaps and imbalances. I see a little more, but I mean, it's traded the same based off market structure, based off structure. Once I get a break, look for my supply and demand. It either come get me or it's not, or it won't. So currently, right now, GJ, structure, market structure. This was the high, it pulled back. This is up here. So it's either going to pull back. I'm on the daily. This was a key level, right? So I'll mark up that. Price pulled back to the level, and I think it's about to go. So if I go down to my lower time frame, right? And I look at my structure, this is the break of structure, this is the swing high, and this is the swing low. So price has to either break this high. If it breaks this high, I'm going to look for price to pull back and keep going. But because we're in this bearish structure, I'm looking for price to pull back into the zone and either pull back to here or break it and come back to this demand zone or this demand zone here. And this is the last down, this candle right here is the last down candle before the up move. So I'm looking for price to push back into this zone. And if you want to mark up the key level, you can, but I'm just basing this off of structure to then buy back up into this zone. Now, the reason I add the key levels is because price can come here, bounce back in this, consolidate. This is when you'll start getting consolidation. When it's in between two key levels until it breaks one of those levels, then you can go take it to the next zone. So price could come into this zone, consolidate, and then take off. But this is where I would be looking to buy. So even if I took it from this level to this level, that's 250 pips. At $1 is $250. At $10 is $2,500. So forth and so on. Okay. So next week, once you all get your accounts set up, then we will go back to using our long positions, short positions, identifying how much we're willing to lose, how much we're willing to risk, put in our lot sizes based off of what we're willing to risk, and then setting our TPs and see if price plays out or not. Okay?
All right, I'm ready.
All right, y'all. I'm gonna grab something before my next call at 6 o'clock.
Oh, wow. You got another one. Okay.
All
You
right.
busy. Thank you, Kim.
You're welcome.
All right, thank you.
Have a good one.
You too.